The euro fell to a near two-month low against the US dollar on Monday on uncertainty over the Greek vote on reforms needed to secure international aid and as investors awaited the US elections on Tuesday. The technical outlook for the euro was also bleak after the currency broke below its 200-day moving average, suggesting further near-term losses. Greece's government will present the latest austerity package needed to secure international aid to Parliament on Monday but will struggle to get it approved in a vote expected on Wednesday. Approval of the reforms and the passage of the 2013 budget are crucial to unlocking €31.5 billion in aid from an International Monetary Fund and European Union bailout that has been on hold since the summer. Without the additional funds, the country would be put back on the path toward an exit from the euro, said Carl Scamata, senior strategist at Western Union Business Solutions in Calgary. The euro EUR equals X1.2783 negative 0.0028 negative 0.22% hit as low as $1.2765 on Reuters data, breaking below a reported options barrier at $1.2800 and stop-loss sell orders at $1.2780 to mark its lowest since September 11. It was last at $1.2783, down 0.4% on the day. Traders said if Greece failed to pass the reforms package, the euro could drop to $1.2625 over $50. But Scamata said given the stakes, it is unlikely that the proposed legislation will fail and a successful vote may help euro drift up toward 1.30 before the end of the week. Having broken below the 200-day moving average around $1.2828, chartists said the euro could face further losses, although near-term support is seen at the September 11 low of $1.2753. If the euro closes below the 200-day moving average, it would be the first time since September and could signal a departure from its recent $1.28 to $1.32 range. The European Central Bank meets this week, with no policy moves expected, but many investors said the bank will need to further loosen monetary policy given the deteriorating economic backdrop. Ken Dixon, investment director of currencies at Standard Life Investments in Edinburgh, which helps manage $263.9 billion, said the ECB's quarterly bank lending survey released last week suggests banks are still tightening lending conditions in Europe, which makes it harder for the economy to recover. Growth in Europe next year will continue to look very weak, which will need further stimulus, he said. U.S. election. Euro weakness drove the dollar to a two-month high against a basket of currencies. The US dollar index.DXY 80.780.18 plus 0.22% rose as high as 80.843, the strongest since September 7, and last rose 0.2% to 80.729. Uncertainty about the U.S. election, in which incumbent Barack Obama and Republican Mitt Romney are neck and neck in the polls, encouraged safe haven flows into the U.S. currency. With the Republicans seen retaining control of the House of Representatives, victory for Obama would be seen as raising the risk of policy paralysis over the fiscal cliff. If Congress cannot agree new arrangements, about $600 billion in government spending cuts and higher taxes will kick in early next year, all of which could hurt U.S. economic growth and underpin safe haven assets such as the dollar. Oddly enough, what looks like a particularly bad outcome for the U.S. might be a better outcome for the U.S. dollar, Dixon said. The yen, often sought after during times of uncertainty, gained. The dollar JPY equals X80.26 negative 0.20 negative 0.25% slipped 0.2% to 80.24 yen, having hit a 4-month high of 80.67 yen on Friday, around a 50% retracement of its decline from March to September. $/yen is the most sensitive to the outcome of the U.S. elections, said Pete Siegenthaler, currency strategist at UBS in Zurich. While expectations of a Romney win has helped the dollar rise above 80 yen, there has been some paring back of those expectations. Some in the markets say Romney is opposed to the Federal Reserve's bond buying program, which has anchored yields. So if he won, treasuries could sell off, driving yields and the dollar higher.